What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, but nonetheless to go ahead and get it started here, I'm going to depart from how I usually go about things in terms of the order. Typically I would start off like the 4 hour and go up to 12 hour, but for this video I'm just going to start off on the daily, given that Bitcoin is looking very good right now, furthering its journey in price discovery here recently, setting a new all-time high here right at around 119.5 thousand dollars. With this daily chart, I mainly just want to go over some potential zones for retracement towards the downside here. Whether or not at this point we could potentially just see Bitcoin continue here on the daily just to stride upwards here, having minor corrective periods embedded within the daily candles here that could be seen on the smaller time frames, or at this point we could see a retracement sometime or somewhere within this vector zone here over the next month or so. Going into next month, I would have to assume, if Bitcoin is going to continue to significantly go higher here, which is where I have my bias and leaning towards, then if we do see a correction, it'll be relatively short-lived and will more likely than not be too drastic in terms of, for example, maybe coming down back to here and setting another horizontal load around 78K, or even really down to this vector zone right here that has a zone of around 91,000 down to around 85,000. I would say that this zone here is the best worst case scenario, the bottom of the barrel. There's also the 200 EMA right here that has an ascending orientation and bias right now that currently sits around 96.5K. Could potentially see a retracement down to that if there's going to be, let's say, perhaps a quick drawdown and a V-shaped recovery, then leading into higher highs to kind of shake out the market as we're sitting here just a tad bit here further into price discoveries, really sitting here at this local high zone here back of 112K with the new price discovery, currently all-time high around basically $120,000. There is also the 50 EMA band that will be rather crucial here, which could support the price finding a bounce anywhere from around, really this vector zone right here is generally correlated with it, but maybe down to around like 105,000 or so. There's also, zooming in here, the 13 EMA, which could act as a support if there's just a brief pullback and then it goes higher, or if it ranges sideways here and we see the 13 EMA move up, which currently sits around 112,000. I would say it's definitely possible that we do see a potential sideways action here, maybe with some retesting, some wicks, or some candle closes down to around 110, 112,000 or so. And then finally, just to point it out, the 800 EMA sits here at around 70, 71, 72K. I would say absolute worst case scenario was still some sort of glimmer of a hope for a further move towards the upside. It would be a significant pullback down. Well, that's a terrible drawing. More something along these lines. Probably be a drawn out retracement. Again, I don't think that's all too likely, but if we look here on the daily, this has been, 800 EMA was significant in the flip of the bull run back here as we saw this corrective period serpentine trade around it, and since then it has not retested it. Generally, we can see here that the 200 EMA has been the rough rule of thumb, with these minor deviations here of being support. But if there is, one potential scenario, maybe there's a black swan event, who knows what happens, that could potentially knock price down this low and then still see some sort of recovery. I would have to imagine that there would be some degree of V-shaped recovery if that happens, but again, I don't think that's all too likely. I just wanted to entertain that because that is an important moving average, which could be at the worst case scenario outside of this scenario here that I pointed out. The potential for a possible bounce if it were to go that low. Moving here into the weekly, this is really probably, I think out of all the charts I'm going over, this is the only new one. I hardly ever, and by hardly ever I mean almost never, use a non-logarithmic chart. For whatever reason, recently had the idea to look at the non-logarithmic chart on higher time frames. Something I found interesting here, obviously already denoted on here, is this curve, which is going to be related to the other aspect that I'm going over on this chart. But just to quickly point out the characteristics of this curve here, the begins here with placing it at the candle close high of the 2013 high in November, Then we go here to the December 2017 high, and then that leads here to the third touch point here. And I have April 2021 of the most recent prior bull run. And with these three touch points being definitively anchored to all-time highs, we can see here that the curve, let's say that obviously here at this point, clearly the all-time high going back to 2013, to 2017, then 2021 has been met there along this curve. Let's say any time from, let's early September. If this curve's hit again, it'd be somewhere around like 212,000. Pushing closer towards the end of this year, around December is going to be somewhere around like, let's just say 230 to 240,000. And then obviously the longer it takes Bitcoin to top out here, because obviously my leaning is that Bitcoin still has one final move to make, and I think it's going to be the most explosive parabolic and volatile move of this current bull run so far. Clearly, as the longer the time goes on, this all-time high is not set, and this curve here is going to actually be met once again. The price will only continue to go higher and higher for the all-time high the longer it takes to solidify. Now, outside of that, this is going to be related, you can see here, and I've pointed this out on the non-logarithmic chart plenty of times over the last number of months in previous videos, but you can clearly see here, even more so on the non-logarithmic chart, we see here the first move or impulse of the bull market. We see here a corrective period. We see the second move, we see the second corrective period, and I believe we're on the third total move here, which is going to be, as I've pointed out plenty of times here, characterized by what has been considered 5-stage impulse wave, if you are looking at things in context of Elliott wave analysis. And we can see here that it would look something along these lines. Let's say this move here, leading into the fifth pivot point, the last pivot point of this pattern, if it tops out sometime closer towards the end of this year around November, hits the curve somewhere around in the ballpark of $230,000, which is also lines up with the range that I've been giving, which I'll get to. One of the main reasons I've derived somewhere around 170K at lowest, but a sweet spot around like 200 to 230K for the highest, for the upcoming all-time high. So there's this pattern here that we can see playing out, and you can see here pointing out each of these moves have increasingly gotten larger, and we are just waiting here at this point to see this move here actually solidify as being generally large. Now at this point it's essentially already larger than both of these moves here. This first leg here alone was, if you were to look at it in terms of just connecting a trend line from the bottom to the top, larger than this first one, and obviously much larger than this first one back here. Now outside of that, one of the main things I pointed out in going over this pattern here is this first move was 100% here from the bottom to the low, or from the bottom to the top, 100%. Then here doing the same thing, bottom to top, 196%, essentially 200%. So we've seen 100% to 200% from move 1 to move 2. Now here we are potentially on move 3 here. So the rule of thumb here is going to be 100%, 200%. Now this move is going to be 300% if it's just increasing by 100 to 200 to 300 each time, or if it's 100, 200, since that's also, you could look at that as not just adding 100%, but also doubling. This next move could be potentially 400% following through the pattern. So that gives us a range of around 300 to 400%. And so taking that here at the candle close low, we can see the 300% move would put Bitcoin anywhere around, pushing around 210,000, pushing 400,000. We're going to see that would take Bitcoin upwards towards around 200, low 260,000s. Let's just kind of staple that to a more psychological value of around 250,000. Again, that is also generally validating the range that I've been talking about that can be derived from various other ways of analyzing the data here. Now, again, so one of the big things I'm pointing out here is I can see as the bull run progresses, each of these moves subsequently in iteration are getting larger and larger and more volatile with this increasing appreciation of the percentage gains over time. And I can generally see that rule of thumb apply to every past bull market as well. Now we can see here, going back to 2018, 2019, 2020, 2021, we can see that we had Bitcoin set the double bottom. It started to slowly grind up, staircase upwards here, just stair stepping, and then we had the first move here. We had this second move here. Clearly, this first move was far smaller than this second move. And then we see this third move here that visually to the eye, just looking at it like this third move looks larger. But if you take the percentage gain of the second move here to the percentage gain of the third move, they are essentially the same percent-wise. And if you take the trend line and you want to compare them this way, you can clearly see that connecting it with the bodies of the candles, this second one's slightly larger here, or the third one in total, this one would be. And if you connect the wicks here, down at the wick down here, you can see it's still, this one is larger here than this second one in total. But even though the percent gains are essentially the same, this one actually here, percent-wise, is like 4% larger than this one right here. So again, we're still generally are seeing that rule of thumb play out where you can see here as the bull market progresses, we see these moves get larger and larger, more volatile and volatile as it goes on. And what's also interesting too is you could kind of, once we really kind of set this double bottom right here within this stage, and then we had this initial move build up to the prior all-time high, you can also look at this bull market of 2020 to 2021 as a first leg up here, a second leg here, and then a third leg here, which would follow through with the pattern of the current bull run, where we're seeing 3 bullish legs in an overall 5-stage pattern. Now if we go all the way back to the 2013, 14, 15, 16, 17 bull run to, or bear run to bull run, so this would be phase 2 of cycle 2. Again, this is going to be also the beginning of the curve that I've gone over. We can see here, you really have to zoom in to get this one because this is just such an absolutely mind-melting parabolic bull market. But we can see obviously here was the brunt of the bull market here. Then we entered this accumulation phase, and then Bitcoin here started to just slowly grind up, gradually stair-stepping its way towards the prior all-time high right here. And then once it finally got to that prior all-time high, you can see that things really just drastically changed. You can see it got to the all-time high here, kind of grinded a little bit upwards, and then once it finally solidified the support right here of the prior all-time high, you can see this first major explosion, the second major explosion, which these are generally the same. If you take the percentage gain, this first one was 233%, the second one was 176%. So again, you can see that it's not always, there are some deviations. It's a general rule of thumb, but even then, if you look here, if you look at it in the sense of a trend line, you can also see that this is kind of similar to what happened in 2020 to 2021. You can see that if you just look at it in the sense of a trend line, this move is smaller than this move here, but percentage-wise, it was, this one here was less than this one, despite this one looking like a larger move visually to the eye as a comparison to this one. But afterwards, you can clearly see that rule of thumb here. You can see it apply. You can just see as the bull market progresses here, it's relatively sideways, going upwards, starts to get more volume and volatility here. And then finally, it just absolutely erupts for the final move. And just to quickly go back to the phase 1 of cycle 2, we can again, there's really not too much to see here. You can see that the phase 1, just like phase 1 of cycle 3, the current cycle run, we're looking here now, phase 1 of cycle 2. We can see here the double bottom was set. Bitcoin started to grind and stair step up here, leading into its prior all-time high. There really wasn't much of a retest of support in this area. Clearly, this is earlier in Bitcoin's stages of maturation, so at this point it was more youthful, had more vigor and more vitality. So obviously it just completely exploded in one move, all the way up to, from really once it started exploding around $12 all the way up to about $270. We saw the correction here, then we saw the bottom kind of gradually build up here to the prior all-time high. Then we just see one major explosion here. You can also see kind of also, if you want to look at it too, thinking about this rule of thumb where the bull market gets more and more volatile as it progresses. You can see the candles here were smaller and they started getting larger and larger towards the upside. So you can also see that as well, given that we are here looking now at phase, like I said, phase 1 of cycle 2, earlier in Bitcoin's lifespan. Like I said, it's just going to have a little bit more power behind it as compared to now in its current times of its older stages. Again, you can see these candles progressively just get larger and larger and have more volume and just strength packed into them as the bull market progresses, which you can see clearly, again, as I went over in the progression of each of these cycles here, with now looking here at the double bottom phase one of cycle 3. You can clearly just see as we go here, continuing to zoom out, you can see the trend generally has been that as the bull market progresses, now looking here at the current period of time we've been in of most recent, you can clearly again see, as I've already pointed out, this bull market is progressing with larger and larger moves, which is a further affirming past behavior. Now if we look here at the weekly chart, again, this is going to be the same M2 chart I've been going over a while. The main thing I want to update here is with Bitcoin continuing to go up, continuing to further its price discovery, leading into, I think, the big moments we're going to start to see those 20, 30, maybe even upwards to 40 to 50% candles on the weekly, and more close to like the 20 to 30% candles on the, like the daily to 2-day chart. That's really when the bull run, or the segmented impulses of the larger bull run, once you start to see those larger percentage gain candles, is really when it's starting to pick up in volatility towards the upside, and it's leaving those initiatory moves. And we can see that exemplified right here with this descending resistance I've pointed out, this horizontal yellow zone that's been correlated with the moves going all the way back to October 2023, and here October, November 2024, when Bitcoin was going to 75K and when it went to 112,000. Now we're seeing the horizontal zone breaking here, and we are waiting for this descending resistance to break as well. And I think this is going to further pack strength and power behind this current move. As I said, each of these moves are getting larger and larger. Now we're seeing this horizontal break. We're seeing over 2 year long, or not over 2 year long, over 1 year long, about a year and a half or so at this point, resistance being broke here in descending fashion. So I think that this is really going to compound a move here, all things considered, as Bitcoin continues to go higher and higher. Again, we can see here with the M2, as I've pointed out further with this trend here, with these highs and these lows lining up throughout the cycle, current bull run going all the way back to the end of 2022. Let's say the M2 is topping out currently right now, and it actually is finally going to start going down. Then we should expect Bitcoin to top out sometime just by around like early to mid-October. So far the trend has been that Bitcoin is topping out maybe a candle or two, so around like a week to two. Let's just say generally give it a month just to extend it a bit. You can see with each of these peaks here on the M2, each of these peaks we can see Bitcoin tops out just a tad bit later. So we could expect, if the M2 is going to top out sometime right now, projected to September, we could expect Bitcoin, if the trend continues to follow and it tops out a bit later, sometime around like maybe late September, early to mid-October of this year. Or perhaps it will top out at its earliest, which I think would be late summer. So I mean, I'm talking like mid to late August, which would essentially be, also pushing in early September. So for all intents and purposes, at this point, it seems like, unless Bitcoin really just goes insane and just rips to the upside with an insane amount of volume, then I don't think there's particularly too much reason to put too much of an emphasis on the late summer notion, which I've been kind of leaning to recently. And then now, all things considered, it seems that it's probably going to be pushing closer towards fall, maybe even winter, depending upon how the next few weeks and the next 1 to 2 months go for the market and the fundamental landscape, with the tariffs starting to pick back up again, the 90-day pause on Trump's tariffs, the tariff wars that shocked the market. The stock market had more of a reaction to that. Bitcoin did, which was, that's a good thing, but those tariffs, that 90-day pause is ending. I believe it has already ended at this point. So that will start to pick up again. And given that this is kind of like the second round, I don't think this would cause too much of a shock. We've already been shocked once. So I think psychologically, at least, people are just going to be like, oh, it's just the same old, it's not going to be really too much of a, for example, the first time around, it was that initial shock. It was something that, was the first time experiencing it in some time. So the market obviously was going to react to that as something kind of new and fresh. Looking here at this chart, the weekly, I've had this chart prepared for many, many months, and there's far more on here that I currently have hidden, which I may or may not go over in a future video. But generally, this chart is conveying my model, the patterns that I've seen in Bitcoin, analyzing it from low time frames to the higher time frames. Zooming in here on this first orange box, we can see, which is going to be the first cycle here, which has embedded within it. If I were to zoom in on a lower time frame, which I've done plenty of times on this channel in the past, you can see phase 1 and phase 2. Now if you look here from 0 to 0, every time you see a 0 to 0, which is the only one you can see currently, this is the cycle range. So from 0 to 0 is cycle 1, for example. Here, as we can see from here of 2011 of May to 2017 of December. And we can see that Bitcoin comes down here in the purple bear market. Then we enter the pink period, which is the expansive bull period. Then we enter a red period, which is the halving. Obviously, the beginning of it here is going to be, for example, the halving back in around, I think it was late November of 2012. That then leads into here the turquoise blue period, which is the parabolic bull portion. We can see here the model laid out, for example, with here we can see phase 2's bear market leading into here again pink expansive bull. The halving happens sometime around July 2016, then extending on from that until the point we see the parabolic bull here in blue go all the way up to the around $20,000 high of late 2017. And what denotes the beginning of the parabolic bull periods are going to be each of these horizontal yellow lines you can see here spanning out from preceding all-time highs. Again, that is what denotes the beginning of the parabolic bull according to the system that is represented here on this chart. So the breaking of the prior all-time highs again lines up with the parabolic bull, and everything leading into that here in the pink is going to be the expansive bull. So we generally have the bull market here. We have the accumulation zone, which is the late stages of the bull or bear market rather. Then leading into the pink stage, again, expansive bull, we're seeing the staircasing, the stair-stepping, the slow, gradual grind all the way up here to the prior all-time highs. Those prior all-time highs get broken. We find support here entering the parabolic bull, and then again we can clearly see here that it is just rinsing and repeating. Here, zooming in, we see cycle 3 of phase 1. We can see again here the double bottom here leading into this peak, which is synonymous with what happened back here during this portion right here, and this correction here into this all-time high here, ending phase 1 of cycle 2 is going to be synonymous with the correction we see here leading into this upcoming all-time high, which is going to be the end of phase 1 of cycle 3. And again, that is why we can see here to explain the ones. Again, the first 0 here is the end of cycle 1. Here we have phase 1 of cycle 2. End of phase 1 here is where the 1 is. We have phase 2 here of cycle 2 ends with 0, which is also on the flip side, on the opposite side of the coin. The end of phase 2 is the beginning of phase 1. And again, like I said, we just rinse and repeat. 0 here, we see a new cycle. We're seeing the phase 1 double bottom. We're seeing the bull market here. And the reason why this is obviously drastically different in terms of, temporal duration and even the kind of just the way it looks to the eye as opposed to this one is just because as Bitcoin is aging, this repetitive, cyclical, fractal-like pattern that I'm pointing out here is just extending in time. It's taking longer for the bull runs to elapse. Same thing for the bear runs. The bull runs are becoming less bullish as the price appreciates, and also the bear runs are becoming less and less bearish over time. But to zoom into here, we can see here I have you can see the halving period here is actually different from each of the prior periods. You can see there's kind of this nice succession of purple to pink to red to blue. Going back here, you can see with each and every single one of these occurrences going all the way back here to phase 1 of cycle 2. But you can notice that this time around has been different, and this is one of the many reasons why this time around is different. But we can see here that the parabolic bull started before the halving even happened. And the halving window is shorter as compared to previous instances of the phases or cycles. Obviously, we have the institutional interests with a number of Bitcoin ETFs in the US. Also, there's more outside of the US as well. We're seeing the increasing adoption. We're seeing, obviously, with America and the current presidential administration, very pro-crypto, very pro-Bitcoin. Again, generally, it's just growing across the globe, and it really seems that we are entering perhaps we're getting closer and closer to that first inflection point of the adoption rate where we're really going to start to see it pick up, as I've been speaking about that a lot in previous and recent videos, trying to deviate away from what's going on in the charts, because this bull run, I mean, despite it looks great, the structure of it's beautiful. I really like the way this bull market looks here. I've said that plenty of times. I think it's a very symmetrical. Just it just looks, you know, pleasing to the eye as somebody who likes to look at charts. I really like the way it looks, but it's been rather brutal. I mean, we've spent here, you can see these quick bursts here towards the upside when they have these kind of agonizing to sideways ranging. We've spent more times of the current bull run going sideways or having corrective periods than going upwards towards the upside with each of these impulses we've seen here going into the upcoming all-time high. And this has caused, obviously, the sentiment throughout this bull run has been relatively unstable. We haven't really seen those insanely euphoric periods bringing the nostalgia of past bull runs. Alt season, again, has just been lollygagging around apparently, although, as I stated, my current opinion or view is that we are still going to see alt season. It's just being delayed because of Bitcoin is getting older and older, and things are just changing, and these are inevitable transformations in the market as it progresses. Mid-recording, my disk space ran out, and I kind of forgot exactly where I was going with what I was saying beforehand. But anyways, just to say some final remarks on this chart, really, we can see here again, we're in the parabolic period, and I think at this point here, we can see that I currently have the parabolic period ending in around like September, late summer again, and let's just say September, maybe early October, but also here extending further out to the very like literally the first 5 days of 2026. Again, I still think whether or not it's late summer, somewhere closer to fall, or maybe closer to winter of this year, I still think right now Bitcoin will top out sometime this year, or at least the vast majority of what's left of the bull run will occur within this year, as opposed to a significant extension into 2026 or even 2027 or later, as some people would potentially mention in terms of an extended bull run for, you know, various reasons that makes sense, but I just don't personally lean towards that view. Now here we see the 2-weekly chart, one of the ones I went over recently here with the accumulation, this indicator down here, the accumulation, distribution, open interest, money flow index, and here the pattern here is that it's predicted the all-time highs here, at least ranges of when really the price starts to blow up towards the upside. This has happened every single time here. See cycle 1, the end of it, here at the end of phase 1 of cycle 2, end of phase 2 cycle 2, here the first peak of phase 1 of cycle 3, and now heading into the second peak of phase 1 of cycle 2. We have yet to see the indicator here get above the value of around 54 or so. Again, this has happened every single time so far, and factoring in just how good the charts look good right now. The fundamental landscape is literally better than it's ever been. The adoption is growing, the acceptance is growing, and again, just, really can't say it enough. It appears that we are getting closer and closer. It might be just, a few years or even closer. I would say within the next 5 to 10, we're really going to start to see the first inflection point of the adoption of Bitcoin and blockchain solutions at large. So with all of that considered, why would this trend break in such a positive climate? I don't particularly think that makes the most sense, but you also have to think about, just to kind of play devil's advocate here, that, obviously you can see here this extending, descending resistance here. There's still some minor room. Let's say that the indicator here gets rejected off of this once more, because this has also been a long-term trend here as a trend line. There's still some tiny room to get above the value that it needs to further affirm this all-time trend, all-time high trend that we can see here. But also, again, just to play devil's advocate, there could potentially be the deviation from this trend due to the fact that as Bitcoin is aging, it's just further maturing. As I've said, it's just getting older and older. It just doesn't have as much power behind it, which might be the reason why this breaks, which doesn't particularly have anything to do really with the fundamental landscape looking so positive right now. And it wouldn't particularly be, obviously, so the fundamental landscape that is causing this breaking or deviation, at least of this pattern, but more so the fact that Bitcoin is, getting to be an older man at this point. You might say that Bitcoin is kind of reaching its 30s or so. It's starting to reach those first years of just noticeable aging. You can't eat certain foods anymore. Your knees kind of hurt. Your joints and whatnot. You just starting really, especially if you haven't taken good care of yourself, really starting to feel the effects of aging. And I think that's I think we're reaching Bitcoin's over the last few years, especially since the end of 2020 to 2021, we're really starting to notice the aging or the decay effect on Bitcoin, most clearly demonstrated with the recent and the current bull run. Now, if we look here again at the monthly chart, Yeah, we can see Bitcoin's just been trading right here sideways within the median of this all-time inside pitchfork. Every single high I can see here has always been above the median. Again, this is going to be something that's relatively correlative with the prior chart that I went over. So, I mean, we still have yet to see this median break. And I think this is going to, again, I think it's going to correlate with quite an explosive move towards the upside. There's still this uptrend here that's been intact. Bounced off it going back to March. Ever since then, Bitcoin's been up from 77, 78K all the way up to the new recent all-time high in the price discovery. So I think there's probably going to at least be an explosion of the RSI here up towards at least like the 382, probably higher, closer to the 0.5 or the 618. I will have to imagine, I would say more likely than not, think that Bitcoin will probably top out on the RSI here below the prior peak of the 2021 or the 2020 to 2021 bull market, and create some bearish divergence, such as obviously happened here. There's generally been, each of these have, you know, from here to here, each of these have gotten lower and lower, so we might continue to see that trend follow through as well, which, I mean, again, goes back to this chart where you can see each of these peaks are getting lower and lower as well. And this is also, this is the, again, this is really one of the main things. I've gone over this plenty of times. But again, really, this is one of those things I feel like is just too important to just forget about for too long. We can clearly see here all the way back to phase 1 of cycle 2. Again, you can see this zone here, just some sort of proximity around the 2.272. We can see the all-time high has always been set here. We can see here in the phase 2, cycle 2, going to phase 1 of cycle 3. We saw the first peak here at the 618, just as this first peak right here was at the 1.5 to 618 of that retracement back at phase 1 of cycle 2. And now here we've seen everything met so far. We've just yet to see some sort of proximity all-time high around the 2.272, which should just be, you know, let's give or take like $10,000-$20,000 from around 210,000. So anywhere from around like 190K upwards towards 230K. Again, this is also where I derive the zone of around 170K all the way up to maybe around like 245, 250K. It's one of the main reasons really that I haven't been too much of an entertainer of Bitcoin, you know, doing something like this and going close to like right here. This would be something like 800K or even higher, upwards towards a million by like, you know, sometime mid to late 2026 or early 2027. Potentially that would be something similar to what happened back here in 2017. Again, this is something that some people are, I mean, there's many notable similarities between this bear market here and this bull run here in comparison to the recent bear market and to our current bull market, as I've pointed out in previous videos, and I've seen plenty of people point out, which I think is one of the reasons why I've seen a lot of people entertain this whole idea of exploding past like 500K, which, I mean, again, is also could be further validated by the growing adoption, the ETFs, and so on and so forth, all the, you know, the positive aspects of the fundamental landscape. Now, when it comes to continuing to keep the bull run intact, given this is the monthly higher time frame being quite an important chart, we can see here that the this red estimated moving average here at the 13 EMA has been acting as support essentially since April 2023. It was minorly, there was a minor deviation right here in around August, September 2023, but it essentially acted as support. So if we see a monthly candle close below the 13 EMA, which currently sits at around 90,000, then that very well could be the indication of the bear market ensuing. You can see once it happened right here in January 2022, what happened afterward, the brunt of the bear market happened. If we look right here going into around June of 2018, you can see Bitcoin had an initial pullback. Once it closed below it, then shortly after, the brunt of the bear market ensued. And we can see the same thing here where we see an initial bounce, then it closed below, the bear market really ensues, accumulation zone, and then bull market. And you can generally kind of just see how that trend holds up here. You can see we closed below bear market, then 13 EMA has recovered here. It's kept throughout the entire bull market. And that's generally, again, been the trend here. So whenever we finally see, so I mean, even for example, we might see Bitcoin come up to this range here, come down and have a bounce somewhere right here, which could potentially be where the 13 EMA leads to right here, something along these lines. We see a bounce right here, but it continues to go down. So it'll just look a lot like these instances where we can see these kind of initial supports along the 13 EMA, but then it ultimately, the bottom falls out, and we see here the bear market just continues to go onwards after that initial support along the 13 EMA. Again, that sits at around 90.2K. But as time goes on, if Bitcoin goes higher, that will also increase. So that's probably going to change over time, but that's something to look out for the next few months in the case that Bitcoin does have an unfortunate downside and downturn here. If it closes on the monthly below that value, it's probably not going to be looking all that great for Bitcoin. And then here lastly, again, we have the 12-month chart. Again, probably the biggest reason why I think Bitcoin's more likely than not to top out this year in 2025, because of the fact that you can see here very clearly laid out. You can see there's one yearly candle, the zeros going into 1, 2, 3, 4 for the first instance there on the left, and then you see the second bear market candle, 0, then you see 1, 2, 3, then it just rinses and repeats, 0, 1, 2, 3, 0, 1, 2, 3. Right now you can see on the right side of the chart, we're on the current in the current bull market, we're on that third candle. Now it could potentially extend to be a 4, such as what happened back here in 2013. But at this point, I don't think that's all too likely. I think the reason why there was this deviation right here, 4 candles, is because this was, again, early on in Bitcoin's maturation cycles. It was, again, it was youthful, and it had a lot more power behind it. So it was more prone to just exploding with little pullback as it is going towards the upside. But we've seen it stabilize here with each of these 3 bullish candles, which again, I think more likely than not this year will encompass the all-time high, or at least the vast majority of the current impulse that Bitcoin is on. And again, we see here the uptrend of around 160 all the way up to around 240,000, again further validating that Fibonacci zone, amongst other reasons. I have been entertaining around 170 to around like 230, 250K. Now finally here, I want to go over this article and just kind of end the video talking about adoption and the technology itself, and emphasizing that like I have been recently. And we can see here the article titled "Crypto Cards Go Mainstream, Market Projected to Reach 152 billion by 2031." So a few things I want to read, dealing here with some demographics and concerning the usage of these blockchain related debit cards. We can see here the article says crypto cards, once considered a niche innovation, will shape everyday financial choices with the market projected to reach 152.2 billion by 2030. These cards are used for everything from online purchases to daily payments, and are reportedly used by nearly 1 in 10 Americans and an even higher proportion of users in Brazil, Portugal, and Slovenia. Going down here a bit, we can see here that Elitsa Tiskova, Chief Product Officer at Nexo, this is Nexo being associated with these forms of blockchain or Bitcoin debit cards, said the study findings show that users now increasingly view the card as an everyday financial tool. Today, people don't want to choose between their financial future and their present needs, and the Nexo card reflects that. Tiskova stated, it's empowering users to live fully without losing the potential of their assets, whether it's art, travel, or supporting a loved one. Crypto is now part of everyday life. Here we can see some information concerning cross-generational use. As per the study's data, Gen Zers account for 37.7% of users who view the crypto card as a digital native extension of their lives. Millennials rank second with approximately 30%, while Gen X and baby boomers collectively make up 32%, while younger users favor a debit-style spending model. Older cohorts, especially the HNWI, generally lean toward credit-backed models. The study concludes that crypto card spending is no longer a niche trend, but a cross-generational, cross-border shift in behavior, from saving to spending, from holding to leveraging. I really like that quote. Again, cross-generational, cross-border shift in behavior, from saving to spending, from holding to leveraging. Meanwhile, the study data also reveals that 65% of Nexo cards debit transactions in 2024 were made using stablecoins, indicating that a large portion of users are utilizing stablecoins for everyday purchases like groceries and travel. The report concludes that stablecoins have evolved into the everyday money of the net. Again, a very good quote right here. Everyday money of the internet. Really kind of harkens back to the that nostalgic meme. I'll probably pull it up here. The Bitcoin wizard, the magic internet money back in the early days of Bitcoin. And really, again, all of this centers around adoption. The growth rate of Bitcoin, blockchain solutions at large, alternative cryptocurrencies, Ethereum, Cardano, XYO, Solana, Sonic. There's a lot of them. A lot of them are basically useless, like a lot of the meme coins. There are obviously a lot of layer one projects or layer two projects or other forms of projects that, they rise up and then they eventually end up dying off. It's not destined for everything that rises up blockchain solution wise in the space to continue to be a lasting player within this paradigmatic and revolutionary space. Again, something I've been talking about recently is the adoption rate curve of technologies. I'll bring up the chart again here, going back into the early 1900s, where you can see that the adoption rate curves of the various technologies have always had an S curve where you can see it starts out at the bottom, slightly trending upwards, but essentially kind of roughly sideways. But then it has that first kind of inflection point where it just skyrockets. Really, it's kind of the only inflection point. Skyrockets up to a high and then kind of plateaus off a bit. And you can see at the bottom right that Bitcoin, obviously still in its infancy, even being 16 years old, it's still relatively, in terms of adoption, in its infancy, and has yet to have that first, or really the only major inflection point, considering the behavior and characteristics of the S curve, where we have yet to see that borderline vertical. And I think at this point, Bitcoin being a technology, or blockchain in general, being a technology that, according to current data, is outpacing the growth of things like the internet and the smartphones. Some things are things that are obviously part and parcel, insanely useful and important aspects of day-to-day life of the modern human society, being in the technological age. I mean, most people, especially in first world countries that are privileged with a good living conditions, hardly can find anybody who can go a day without going on the internet or using their phone or using a tablet or a laptop or anything like that. And now we're in this whole new wave and era of things where we're seeing Web 2 and transitioning to Web 3. TradFi, traditionalized finance, to DeFi, decentralized finance. We're seeing, again, it's just further and further progression and evolution of not only the human on the individual and collective scale, but also when it comes to the evolution of technology itself. I mean, if we go back thousands and thousands of years ago to the BCE period, we can think about fire, and then the wheel. You can think about various developments in irrigation, obviously the budding of societies and civilizations going back to the Mesopotamian region like Sumeria, Acadia, Babylonia, Syria, Egypt. You think about all these early cultures, and fast forward thousands and thousands of years, centuries upon centuries, we then head into having, we started to sail the oceans with ships. We had compasses. We had, obviously, more recently of the industrial revolutions like steam engines. We then, getting closer to the 1900s, we have things like electricity. Then obviously we had computers that advanced into the way we understand computers now today, and in at home personal usage. Obviously the internet. Clearly the trend is obviously we are evolving and we are progressing and progressing in terms of technology, at least. Obviously humans in general seem to kind of be getting less and less wise over the centuries, but nonetheless our technology continues to boom over the centuries. And I think right now with blockchain solutions at large, Bitcoin specifically, we are entering one of those major paradigm shifts, something that it would be akin to like fire or the wheel, these major turning points, not just minor innovations of technology throughout history, but like obviously there are certain ones you can pick out of this overall technological advancement on a timeline. Very important ones like the internet, for example, or electricity. I think Bitcoin and blockchain is one of those things when it comes to thinking about finance and economics, decentralization, scalability of these solutions, the security of these systems to provide integrity within sectors of day-to-day human, peer-to-peer interpersonal reactions between individuals, and also the individual citizen interacting with the collective institutions and the governmental entities, and making sure that the entities which they are dealing with are, trustworthy, they have integrity, that they're what they provide is secure, that they're going to keep your information secure. And really what Bitcoin does and what blockchain really in its ideal state is trying to do is provide further and further freedom to the citizen, and to further and further divide the dependency of the citizen upon the government and their financial or economic institutions. You can even think about in the development of America. We had there was the separation of the church from the state, and now with blockchain and Bitcoin, this can be seen as the separation of state and finance or economics. So you can kind of look at it as this triadic little model here, where we initially, going back to, I mean, not too long ago, just a few hundred years ago, with the development of America, we had, previous to that, the church and the state, or just the religious views, and the city state. You know, like you think about, like in Greek, the polis. Just going back to Egypt, you can think about the I'm forgetting the name for them right now. But in any, if you look at any civilization throughout history and how they divide their land regions into certain governmental compartments, we can see that the state and the religion were always, basically one and the same, with the pharaohs basically being a form of God on earth, whatever God they may have wanted to believe in back then. But nowadays we can see here that we've further and further from that type of society and civilization. We are now entering a paradigm where I believe where we're going to be able to really cultivate and foster that extended freedom from the government, where we can see that the government exists separate from whatever your religious or spiritual views may want to be, and it also exists separate from whatever you want to do in your own individual financial and economic decisions. But that was really all that I wanted to go over and talk about in this video. But all of that being said, as always, none of this is meant to be financial advice. Everything said, everything gone over. As always, I hope you all enjoyed and you have a wonderful day.